Welcome to this first episode of the Discuss segment of the Market Opening Gong, where we provide incisive information and engage in robust discussions on investment for millennials. Today, we will be looking at how to invest and create wealth for millennials in Africa. With me to discuss on this topic is Mrs. Tomie Balogun, a certified financial education instructor, the founder of the Vestract company, Twelvevest, and CEO of the Green Investment Club. Mrs. Tomie Balogun, thank you very much for joining us on the program today. It's great to have you with us.
Thank you very much for having me. So happy to be here.
So you have gone from learning from a personal experience to helping thousands of millennials in Africa invest in businesses that drive Africa's economic growth. And I remember when I heard you saying your story of how you had recently paid for your MBAs and realized that you had little savings left, which was what really sparked that interest in investment for you, and also founding the Green Investment Club with some of your friends. So I'd like to ask, as an investment enthusiast and leader in the financial education space, what is the importance of investing for millennials?
Absolutely important. I don't think we can say how important it is enough. I mean, like you said, my personal story, right? Because this is something that really hits home. It's something I've experienced as a millennial myself. So we work hard. We put in so much into our work. We go to school, get an education, get a job, and earn income. So the only thing is, if you're not putting that money to work, chances are you're going to have to keep on working for the rest of your life, right? So investing is really you putting your money to work, because when you put your money to work, it creates an opportunity for you to earn an additional stream of income. It also creates an opportunity for you to do more things. As millennials, we have dreams, we have goals, we have wishes. We want to do so much more. We want to impact the world. You really cannot do that if you have limited income. Right? So for me, it was a lot of learning, and that started me on the process to learn and get financial education, learn what investing is. So investing is so important because it practically makes the difference between how you live your life and how you live your life when in the future as well.
Yeah, so one key thing that I really got from what you just said is the fact that you had to do a lot of learning in terms of financial education. And from what I find, and because a lot of my friends really say that, even when they have interest in investing, even from universities, even from when we're in schools, there's really nobody that really teaches us the ropes on how to go about this investment. So I also really believe that, a lot of millennials need to go that extra mile to learn about investing before they can even then into it. So we know that you go on a lot of visits to several universities, speaking to a lot of millennials. And what do you think are the issues that hinder millennials from investing? Because there was a time, one of the articles that you wrote, you said that you went to a university and a millennial had raised an issue that she didn't really see the importance of investing, of pensions. So what do you think are some of those things that stop and hinder millennials from actively investing?
Absolutely. I think the first thing is education, right? So we all go to school, we learn a lot about whatever courses we go to learn about, even just I study accounting, because I worked in consulting, I did ACC at some point. So we really did not get financial education. So financial education is really learning how to manage your personal finances, how to manage it, how to budget, how to multiply it, how to invest, how to make financial decisions for yourself. Right? So most people just think that, it's something complex. No, it's not complex, because we all spend money every day. If you want to, when you earn an income, you decide, okay, how much do I spend on food? How much do I spend on clothing? How much do I give to my family? That's basically having a plan for your money. Now, the financial education is going a step further to saying, how can I put this money to work to invest it to ensure that it can earn me some interest payments or some additional stream of income? How can I own assets that will earn me cash flow? So like I said, the first thing is we don't get education. Nobody's teaching us financial education. I had to go on this journey myself. And in Nigeria, because of the interesting state of our markets, we really don't have a lot of books that talk about how to invest in the Nigerian markets. Now, you can get a lot of books about how to invest in the US, in the UK. There's a lot of information online, but you see, the information for Nigeria is in the heads of a lot of experts and adults that have done this over time. So for me, I had to start looking out for who are the people I could learn from. So I would go into an office and say, please, can you teach me how to invest in Treasury Bills? Can you teach me how to invest in the stock market? It was a lot of education, because these people just have all of this knowledge in their heads, right? It's very hard to find someone who has invested over 25 years in the stock market. One of my former bosses I had to sit down with him to learn every day. So education is very key. Second thing is access. I mean, thankfully, compared to 5 or 6 years ago when I started investing, now there are a lot more apps that you can invest with, right? So access is a lot better now than before. Before, you had to walk into a bank. I remember walking into a bank and even the customer service person did not know what Treasury Bills was, right? But now there's a lot more information. So education and access. So you brought up my article that I wrote for Pella Niger, and I thought that was interesting because I find that a lot of financial institutions probably do not understand how to serve the millennial and the Generation Z market. So on that tour, for instance, I went with a pension company and we were talking about, thinking about retirement and your future. And for a lot of them, it was like over their heads because think about it. Do you think about your retirement? Like retirement is like years to come.
Yes,
Nobody's
later.
thinking about that now. We're living in the present. You're on social media. You want to travel. You want to see the world. You want to do so much. So who is talking about retirement? Please, it's something like our parents used to talk about. So it seemed like something they didn't really connect to. And I thought that this was really clear that a lot of financial institutions don't understand how millennials think. Right? So yes, we live more in the present. We don't want to work in a job for 20 or 30 or 40 years. We want to express ourselves, we want to live on purpose, we want to impact the world, we want to travel the world. Social media has opened up the world to us, right? So we just need funding that can help us do and live the lives we want to live. Now, of course, there has to be a balance where you can see that you need to think about the future 20 to 30 years to come. But don't tell me that I need to spend all my days now planning for retirement. That doesn't work. So I saw that there was a gap there somewhere. So even with the second issue, which is access, I feel like a lot of financial institutions need to bridge the gap. For instance, a lot of millennials want to own their homes and houses, but it's not that easy because mortgage rates are crazy. So we need them to begin to bring up more solutions and products that will help millennials invest and own assets. Because in Nigeria, 60% or more of the population are young people, right? Less than 30 to 35 years of age. So it's time that we begin to focus on that segment of the population because that's what determines the future of Nigeria in the years to come.
Yeah. And even when you say we need to focus on the younger generation, the CEO of CSCS in a recent interview on our station had said that the young population are not really participating in the capital market space. They find that the lot of people that are really actively, trading, they are more of the older people. And going from what you said when you were just answering the question, you mentioned that you had to really go into offices to ask them to explain to you. You had to do the learning, the education on your own, to ask them to explain to you treasury bills and stocks, fixed income and all of that. Can you just quickly do a 60-second explanation of just what treasury bills are, what stocks are, what fixed income really is for someone, a very young individual that doesn't really have any prior knowledge on investments?
Fantastic. So just before I go into definition, I think that's another issue because a lot of these people don't know how to explain these financial securities and terms in a language that they can easily understand. So it took me learning them myself and then trying to explain them with my blog and with all of my investment clubs. So let's talk about financial markets. So there are financial markets, which is where financial securities are traded, basically. So we have major stock market, we have the money market. So the money market is where we trade short-term securities. So by short-term securities, I mean securities that you trade that have a tenure of less than a year. So we have the 90-day Treasury bill, we have the 180-day Treasury bill, we have the 365-day Treasury bill. So in the money market, they trade short-term financial securities that you can liquidate in less than a year. So you have Treasury bills in the money market, you have commercial papers in the money market, basically, and all kinds of instruments, but they're always mostly short-term, which means that you can liquidate them in less than a year. So the Treasury bill, what's a Treasury bill? Treasury bill basically means that you're lending to the government. Think about it that the government comes and says that, oh, I need some money, right? And I need you to give me some money and I will pay you back over a period of 90 days or 180 days or 365 days. That's what Treasury bill is. Okay. Now, in Nigeria, we've seen a case where over time, the rates on Treasury bill has changed over time. For instance, 6-7 years ago, Treasury bills were trading at say 5%. Then over a period, we saw it go to about 13. We went to as much as 25% for a 365-day Treasury bill at some point. But now we are back to low figures, right? So it's important to understand how economic indicators also affect investment opportunities. So I remember when it went up to 18 to 25%, everybody was excited. Everybody was investing in Treasury bills. And now Treasury bill has dropped again. So when you understand that economic indicators, economic circumstances, and you look at coronavirus now, COVID, it's affecting a lot of investment options as well, right? So that's what you find in the money market. Let's go to the stock market, which is the capital market. Right. So in the capital market, you have the stock market because the capital market is where you really trade long-term instruments. Anything longer than a year is traded in the capital market. So you find the stock market in the capital market. You also find bonds, right? 2-year bonds, 5-year bonds. You find that in the capital market. So financial markets is really where you bridge the gap between those that have and those that do not have. So government, companies come to raise money. And in return for raising that money, they give you a return. So it could be in terms of interest on your treasury bills for the money market on commercial paper, or it could be in terms of dividend if you buy stock or shares of a company in the stock market. So that's it in a nutshell. Financial markets is, this was created years and years ago in the Western world, and we've seen it go around globally as a way for basically for you to help those, take from those that have and give to those that do not. So there are companies that are doing a lot of good in this world. They need funds, right? So they will come to the market to raise money to do business. And in return for that, you are a shareholder of that business, right? And then you also earn dividend because you're a shareholder of that business. So basically, that's how financial markets work, right? So in Nigeria, we have a lot of people stay away from financial markets, especially stock markets, because they're afraid that they will lose money because of the history of the stock market. Exactly. But I was saying, I met one of my bosses recently. He was my very first boss after NYC, and we got talking. And he told me about how he's been trading with his own money in the stock market for over 25 years. And I was amazed to learn the results he had achieved in terms of dividend. These are the stories we do not hear about. We only hear about people losing money and all of that, the market going bust. There are people actively trading the market and actively earning income from that market. So it was interesting to learn that there are stocks in this market that have done 300% in dollar terms over a period of 10 years, right? It was a lot of understanding, like how to pick the right companies, So yes, in terms of regulation, I need to say this because the key reason why a lot of millennials stay away from this market is because they don't think that regulation is really doing their work. It's work, right? Because in terms of regulation, some companies should not be trading on the stock market. There are companies, for instance, that are trading and have not paid dividend for years, right? So we need the SEC or CBN, all of the financial regulators that manage the financial markets to be able to stand up. And we know that they are taking active steps, but to build more confidence, to build more investor confidence, we need to see that they are really regulating the market, because that's really what you see in more developed societies. So I cannot put money in a company and company just goes south and that's it. Somebody has to step in to compensate me as an investor.
Yeah. So now that you actually speak of the regulators, Securities and Exchange Commission sometime last week really released a report that there are some investment schemes, there are some Ponzi schemes, and people shouldn't really invest in those ones, and that they are doing so at their own risk. And financial journalist Mr. Bosomofaye had said that the thing is, these regulators are not even making use of the social media platforms where the millennials are really active to pass this information across to them so that they know, and then they can be wary of these investment schemes. Because one minute somebody's telling you, oh, there's this new investment that just came out, come and put your money into it, but they are not even aware that these are scams or these are even fraudulent transactions. So yeah, the regulators really have their role to play in, communicating with the millennials through social media, and also using the language it is that the millennials really understand and that the millennials speak. Because I know you said something about the millennial language, you only live once. They just want to, hang out with their squad and just post a lot of pictures on Instagram. Like you said, they live in the moment. They live now. They want to travel and go on go to various destinations. So as one of the founders of the Green Investment Club, I know it's what you co-founded with some of your friends. Can you shed more light on how it works and really just differentiate it from a group of friends just coming together to put some money together to just help themselves save some money?
All right, so you started off with sharing my story. So for me, it was a wake-up call when I realized that I'd been working for this number of years and I had no, savings assets or savings of any sort. And knowing the kind of person that I am, or I was, because I know a lot better now, I knew that I would need people, friends to hold me accountable. Because I knew that if I started this journey, I would probably, maybe one day I'll just be like, please, I beg, I cannot come and die. I didn't come here to kill myself. Let me just spend this money, you know. So I knew that I needed that accountability. So I had a group of MBA classmates and we said, you know what, let's start an investment club. You know, at the time we didn't call it an investment club. We just knew that we wanted to go a step further or a step higher than the popular Ajo or Isusu that a lot of people do. So if you know the traditional savings schemes, such as the Ajo or Isusu, people just come together and they pay each other in cycles. But I knew that I didn't want that. I wanted something that we could come together, invest in, you know, stock market and assets and small businesses, and actually see that money grow over a period of time. You know, so right after my MBA, we started first salary, first income. We started taking money out. You know, we made investment in bill. And that's how I really got into learning a lot about the markets, you know, because that's when I knew that, look, it's one thing to have the money, it's another thing to actually understand how to invest the money, right? So that's another lesson, because for us, we thought that all we had to do was pull money together, because as an individual, I thought that my money would not be enough to do a lot of the things that I had in mind. So I thought if I come together with friends, 5 of us pull money together, we'll be able to do a lot more things. But then when we started losing money, and we knew that, look, it's not just about having the cash. You also need to have an education about how best to invest, you know, the money. So that's what started my journey, my process and investment clubs. And on that journey, I started to blog about it, and a lot of people started asking me questions. And I thought, okay, this is something I could share, because I saw that, look, there's really an advantage to come together with people that are like-minded, people that are interested on that journey with you. He just keeps you motivated that I'm not the only one. So even, I mean, sometimes you're like, please, I need to spend this money. You just remember that, look, if you do not transfer that money, if somebody's going to call you and say, what's going on? We all agree to do this. Why are you stepping back now? You know, so I started to blog about it, and that led me on the journey. So I've also found out that there are different models of investment clubs. So when we started our model, it was a financial model. We would contribute money and we would invest actively over time. But then I realized that not everybody was at that point where we're ready. You know, so it's one thing to be ready. So for instance, you can start an investment club and start contributing money, and then you start losing money, you'll be afraid. Like, I did not come here to come and lose money, please, right? So it's one thing to be ready, it's another thing to know that, oh, I need to learn how to invest first. So because of that, I wrote a book, I built a framework around investment clubs, and I thought, you know what, there are 3 models of investment clubs. Beyond the model that we hear about from the United States, there should be another community model, which is the Green Investment Club, where we all come together as a community to learn together, share investment opportunities, and basically grow together. You know, so I have the financial club, which is what I started with my friends 6 years ago. And I also have the community model, which is the Green Investment Club. Now, the Green Investment Club, we have over 1,000 members across 13 countries. And till date, we've done over 2.2 billion. That's $5 million.
So that's 1,000 young people.
Absolutely, 1,000 amazing young millennial investors. And sometimes it gets really emotional for me, because I started this journey with 35 members. And I see those 35 people today actively investing. They're like, Tomie, where's the next investment opportunity? You know, seeing the change in 2 years. I get emails and sometimes they say to me, thank you. Thank you so much. I can't believe I own real estate. I own stocks. I own all of this. I mean, they could have just been like me, working for 4 or 5 years and owning nothing, right? Yeah. So with that model, we've taken advantage of the power of many as well. So we attract investment opportunities. And because we want to do things correctly, we do due diligence, which is one of the ways we educate people about scams, how to avoid bad investment opportunities. Until date, we have not had a bad investment, an investment go bad. Any investment that we have put our money to in the Green Investment Club, because we are very, very careful and selective, right? So yes, I mean, financial markets go up and down, but I'm saying in terms of us investing in something that goes bad, we haven't had that, right? So that's the Green Investment Club, the community model, you know, and it's been an amazing journey, and I'm looking forward to growing more and more and educating more people on this journey. Now, the final model, which is what I write about in my book, is the project-based model. Okay. So for that model, I saw that there was an opportunity for people to come together and do projects, say in real estate or something. Most popular is the real estate. And you know, real estate in Nigeria is quite, you know, expensive. A lot of people need a lot of capital to get into. So 2 years ago, I brought 40 women together, and we came together to buy land, real estate along the Lekki-Ekpe Expressway. And today, those 40 young women, and you know, it's so amazing because the 40 young women, there were 1 or 2 people that it was from NYSC first job, they started to contribute. And some people were much older, but a mix of women, and we came together, and today they all own real estate. That's the power of coming together with like-minded people to achieve
and even holding each other accountable.
Absolutely, for 2 years, So yes, that's what we've seen over time in terms of that's how my journey has been. I started off trying to learn myself, and then also teaching other people how to put together and implement this investment club.
So you have really spoken extensively on the importance of the capital markets, and investing in the capital markets really cannot be overemphasized. So what do you think are some strategies that should be adopted by really the major exchanges from the NSE, FMDQ, NESD to really boost the millennial participation in that sector?
Well, first of all, they need to bridge the gap. They need to understand how millennials think. Sorry, please hold on. They need to understand how millennials think, right? They need to understand that, look, they live in the present, and they need to build products. They need to talk to them and build financial products that will help them achieve their goals, right? Very important. We also need regulation. Now, the reason why a lot of millennials or young or anybody fall into the scams, I mean, we all know about MMM and co, is because they don't know the correct way to invest, okay? They don't know that investing is a long-term process. They just think that, I want to put money and make 100%. I want to make 500%.
Instantly.
Right? They don't really think about delayed gratification. So that's also very important, right? You need to understand all of these things. So there's a gap with products, there's a gap with education, and there's also the gap with regulation. So those 3 core areas, once I am working on education, which is my major focus area, education and bridging access as well. So if they can bridge those gaps, work with people like us that are already in that industry, and even, have more reach, because most of us, we are only able to reach those that are on social media. What about those that are not? You don't have access to that. So that's the huge opportunity.
Yeah, so I hear you clearly when you say that, they need to bridge the gap of the products, the education, and even the regulation. So bringing this to an end, what would be your final advice to millennials on investing, financial independence, and really creating that long-term wealth for themselves and really their future?
I would say that, look, it's not about what you earn, it's about what you can preserve. Right? We understand that you want to live your life and enjoy your life in the present, but one of the key things I always teach people is make investment a bill. As much as you make it a bill to spend money on the things that you want to enjoy now, you spend money on travel, spend money on hanging out with your friends,
and even looking nice.
Make investment a bill as well. You can do everything together, and then work on getting an education that will teach you how to actually start investing over time. Start with what you have, start where you are, and then come together with a group of friends to hold yourself accountable, because it can be a very lonely journey if you do it yourself.
Thank you so much for being with us. It was great having you to discuss.
You're welcome.
Thank you very much. And that brings us to the end of this discourse. Do connect with us on our social media platforms showing on your screen, and be sure to visit our website www.proshareng.com to get more updates from our news stories and videos. Until next time, thank you for watching, and do stay safe.